In this presentation, we will set up and import inventory items within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We are in the Get Great Guitars file. We are now going to set up the inventory items. Last time we set up the service items, we're going to do a similar process by going down to the sales on the left side. And within the sales, we want to go to the products and services. If we scroll down, then you'll note that we entered services last time, and we did that by importing an Excel file. That's going to be the faster way to do it. We're going to do that again here, and you'll see again that it'll be much faster to do it with the importing because we're going to have more data input we'll need to do. We'll have to set up more information, and we can do that one by one by scrolling up and saying new, and then adding an inventory item. But doing so is not a systematic setup because it's not in a table format. It's easier to enter a table format. It's also often the case where we have our list of inventory possibly somewhere else in some type of table. If we can just convert it to Excel or CSV file, we can then upload it. That's what we'll do now. You can go through this import and process. If you want to just use this file that we're going to create to work along with the problem instead of just doing all the data input into the Excel file, we will provide that as well in Excel and CSV file so that you can download it and just import it and then move on and work forward with the rest of the problem. We have now opened a new Excel worksheet. You may be able to do this in Google Sheets as well. You'll have to save the Google Sheets as a CSV file. That might be a way that you can use that format and still be able to upload and work along with us. I'm going to make this a little bit larger at first. There will be more columns than there was for the service item, so it will take a bit more time. We're going to start by putting our cursor in A1 up top. We're going to use the tab key, and so we're going to enter the headers and then the tab key. So we're working on the headers now of the inventory items that we will upload, the inventory items that will be used when we create invoices and purchase orders. So first we're going to have the item name. So I'm going to type in item name, and then I'm going to select tab. And so that'll go to the next tab. Now there's a little crossover. That's okay. That E is kind of in there. Not a big deal. I can type all the names and that'll be okay. It won't delete anything. So we're going to say sales description. And once again, there's some crossover. I could keep doing this and typing, but if it's annoying to us and we're saying I don't like to see that crossover, we can widen these cells. So I'm going to highlight both of them, put my cursor in the middle between the two columns on one of them, left click and widen the cells so they're kind of the same size. If I do both at the same time, two columns at the same time, they'll kind of be the same size. And then we're going to go to C. We're going to say purchase description. So this is going to be the purchase description. In other words, this will be the description when we purchase, like on purchase orders. And I just widened that again. And this will be the sales description like on invoices. And then we're going to have the cost. So we'll say this is the cost. That's how much it's going to cost when we buy the inventory because we're going to have to purchase these. That'll be on purchase orders. And then we'll have the sales price. This is what we sell it for. This is what's going to be on the invoices. And then we got the cost of goods sold account or the expense account, which is going to be cost of goods sold. In other words, there's going to be an inventory items when we sell it, and that's going to be cost of goods sold. We'll describe this. This is kind of actually a complex journal entry, even though we make these invoices all the time. So we'll discuss that in that journal entry as we go more and make the inventory adjustments or the invoices, enter the invoices. Next item is the income account. So that's going to be the account that we're going to charge when we sell the inventory. Next item, and we'll make this a little bit larger. We're running out of room here though. Next item is going to be the asset account. This is going to be the asset account that will go down, that'll track the inventory. It's going to be called inventory, the asset of inventory. So that'll be our asset account. And then we're going to have sales tax code. And is there sales tax related to it or usage tax? We're going to say probably. So we'll practice using the sales tax. So we got the sales tax, and we're going to say Q, and this one's abbreviated. We're going to say Q. It'll be QTY. We're going to say on hand, quantity on hand. And that's going to be how much we have at this point in time when we upload the information, how much we have as of now. And that's then we're going to have the as of date. So as of now, the quantity on hand. So I'm going to make this a little bit larger. This is a lot of them, so we'll go over it again. I'm going to highlight these cells. I'm going to put my cursor in the middle of them. I've highlighted all the columns in the middle and double click on it, and that'll make them just fit, wide enough to fit. We'll have to adjust them a little bit more, most likely. So I'll then highlight the whole row 1. So we'll put our cursor on the 1 so it looks like that. Highlight the whole row. Home tab, font group, make it bold. That'll let the system know that this is a header cell. So once again, we've got the item name, sales description, that's what'll go on the invoice, purchase description, on the purchase order, the cost, how much it's going to cost when we buy these items, this inventories that we'll later sell, sales price, what we're going to sell for when we sell the item, expense account, cost of goods sold, we're going to have to charge when we sell the inventory, income account, which is going to be some type of sales account, merchandise sales or something like that. And then asset account, that's going to be the inventory account that we're going to have to charge when we sell the inventory and purchase the inventory. Then we've got the sales tax code, and that's going to be basically the fact that it's going to have sales tax related to it if it does. So either it does or doesn't have sales tax typically. The quantity on hand, how much we have at this point, as of now, as of this date, which we're going to say is 2018 end of the year, so that we start the data input in January of 2019. All right, now let's go back through and actually enter the inventory information. We're going to be selling guitars, so we're going to be entering guitars. And I hope I spell all these guitars right. I'm not sure if they are, but this is going to be our practice problem. So these are guitars. We're going to buy and sell guitars. So the first one, the item name, is going to kind of be an abbreviated name. It's going to be an ELP. That's going to be the item name. The full description is going to be an Epiphone Les Paul. That's going to be the sales description. I just typed it in there, and I'm going to copy it. I'll just copy the whole cell, right-click and copy. Let's right-click and copy. And that'll also be the purchase description. So purchase description, we'll paste it there as well. And then we're going to say the cost is going to be $400. That's what we buy it for. Sales price, we're going to say it's $500. That's what we sell it for. The expense account is going to be cost of goods sold. And we may want to check just to make sure that these expense accounts are in our chart of accounts. In other words, if we go to our QuickBooks system, and if we go to the accounting chart of accounts, we want to see, okay, what's the cost of goods sold account? Make sure we get the right name for cost of goods sold. Otherwise, we'll get kind of an error. It's an order of the types. So here's the cost of goods sold account. It's called cost of goods sold. So that's going to be the account charged when we sell the item. We'll have the cost of that sale, the expense of the sale, the expense of losing the inventory or giving up the inventory. The other account is going to be the income account. It's going to be some kind of income account. So if we go back over to our QuickBooks file, then we'll say, all right, where's the income accounts? If we scroll down, it's in order. We've got the assets, liabilities. Here's our income type of accounts. So our income type of accounts, we've got sales, sales of products, income. So again, we've got sales or sales of product. Those seem similar. So we're just going to keep it at the sales. Let's go up top, and we're just going to call it sales. And the next one is going to be the assets account. That's the inventory account. So let's see what QuickBooks has for the inventory accounts. We got inventory and inventory asset. Again, those two seem kind of like a duplicate. We may even want to delete one of them. We're going to go with the inventory. So we'll call it inventory. We'll go up top and say inventory. Next item, we have the sales tax, and we're going to say there is tax. So it's going to be a taxable item. The quantity on hand for this, we're going to say that we have one right now. We already have one, meaning as of this day, we have one. Meaning QuickBooks is going to have to put it on the books and actually put this on our financial statements and actually do a journal entry. That's going to be a little bit messy because usually we do that with debits and credits. So we don't want to do it in the year we're in, 2019, but start it in last year, 2018. And that means it'll be in the books as of the prior year, and hopefully everything will kind of work itself out so that it's not going to mess anything up in the current year we are in. So we're starting January. We want to put this in the books on the first period prior to the date we're going to start entering information. If we're starting information in the middle of the year, like if we were starting in the middle of 2019, we still may want to put it in there as of the beginning of the prior year if we're going to be a year in December 31st, because that's typical for us to run reports for the entire year, even if we only started in the middle of the year. And again, we don't want any of this kind of setup stuff to mess anything up. Next one, we'll call an epi stand. So we'll call it epi stand because it's going to be an Epiphone standard. The full name Epiphone standard. And again, if I get any of these guitars wrong, forgive me here. It's going to be a practice example. It's a little bit long here, so we got the Epiphone Standard Pro. We'll make this a little bit larger to fit this on the cell. I'm going to copy this cell. I'm going to right click and copy. That'll be the purchase description as well. These items we're going to sell for $480. We're going to buy them for $480 and sell them for $600. This too is going to be going to the cost of goods sold account. Notice it's populating for us already. Then we're going to have the sales account. That looks good. Inventory. That looks good. This is all be the same. Tax looks good. Now the quantity on hand, we're going to say again, we have one of these. That just means that we have one guitar at this point in time. Once again, 12/31/18 is the time we're going to put this in place. Next item. We're going to call it an Epi Riv for an Epiphone Riviera. Once again, we will copy that, right click and copy and paste that as the purchase description as well. So we'll paste it there. We're going to say that this one we're going to purchase for $440. The cost is $550. Once again, cost of goods sold is going to be the expense account. Sales will be the income account. Inventory will be the asset account. It will be tax, sales tax or usage tax. And once again, we're going to say one on hand, 12/31/18. Next item, we're going to call it a Stein and Solid. And that's going to be a Steinberger solid body. We'll go ahead and copy that one. So we'll copy that, right click and copy. We'll paste it to the next section and paste. And that one will be for $328. Sales price $410. Once again, cost of goods sold is the expense account. It's going to be the income account will be sales. Inventory for the asset account, it will be taxable. And for this one, we're going to say, once again, we have one. And that's going to be 12/31/18. We just got a couple more here. Next one we're going to say is a Gib USA. Full name we'll say is a Gibson USA. And so we'll copy that, Gibson USA, and paste that in the sales and the purchase. So this is the abbreviation, full name. Then we're going to say that the cost there is $304. We're going to sell it for $380. Cost of goods sold, sales, inventory. It's going to be tax. Again, if I'm going a little faster, then you can you can slow this down. But then we're going to say this is going to be two on hand as of now. So this time we have two on hand. Remember that. Remember that we're going to have a journal entry related to this. QuickBooks will have to enter a journal entry to do this. 12/31/18. And then we're going to have the last one here. We're going to call it an Epi Semi H for an Epiphone Semi Hollow. We'll go ahead and copy that. So we'll right click and copy. We're going to put that in the next cell. We'll right click and paste. We're going to say that this one was $320 and then $400 for the price. That's what we sell it for. Once again, cost of goods sold, sales, inventory, tax. And then once again, we're going to say two of those on hand and 12/31/18. All right, so there's what we have. So this is going to be our information. We're going to save this, and then we're going to import it to QuickBooks. So we'll do this by going to the File tab up top. We're going to go to Save As. We will then browse. We're going to put it on our desktop, so desktop. We'll look for the GGG, Great Guitars. We're in Section 6. We're going to save this as Inventory Items. Inventory Items, and Save. So there is our file. Now we'll close this out. So I'm going to X out of this. Now we're going to go back into our Sales tab. So we'll go to the Sales tab up top. We're in the Products and Services. And now we're going to import the inventory. So we're going to go up to the New up top. We're going to Import. So we'll select the Import. And once again, we'll go to the Browse as we did with the service items. We need a CSV or an Excel file. We will then go to Browse. We locate this on the desktop. That's where we put it under GGG. We're looking for Section 6, and we want the inventory items. So we'll select the inventory items. And then once that is imported, we should have the next selected, so we can then say next. And then now we're just going to match up to make sure that what we have, the headers that we have, are matching up to what the proper headers are for QuickBooks. So I've opened up the Excel sheet. We can go back and forth. So the first one, product and service, and we have the item name in our Excel sheet. Meaning, in other words, here's our Excel sheet. Here's the item name, and that's under the product or service. So that's actually lining up right. These are the items that we want, the name of the items that we have, and that's going to go into the product or service name. And then we're not going to have anything here. We didn't enter a type column. We probably should have to describe it as an inventory type. So this may be something that we'll have to add to as we import the data. We'll have to add that into the input screen once we further import, once we go to the next field. The sales description is the sales description. That seems right. That's the sales description. We then have the sales price or rate matching up to the sales price or rate, meaning it's matching up to the sales price here. That looks good. Next item, we've got the income account matching up to the income account, which looks right. That's going to be the income account, which will be sales there. Next one we're going to have is the income, the purchase description matching up with the purchase description. That looks good. So that's going to be our heading row there, or column, that will line up. And then we got the purchase cost, which we just labeled cost. So it looks like it picked up the correct account there. The purchase cost, we just labeled the cost, so that looks good. Then the next item, the expense account, we're going to line that up. We chose the expense account. That looks good. Expense account is the expense account, which will be cost of goods sold. Now the quantity on hand, we put QTB or something like that. We abbreviated it. So we got this abbreviation. That's okay. We're just going to go back over here and say that one should be the QTB. And if you want to be more specific, then of course type this exactly in there. You won't have this problem, but it's not a problem to just go in there and match up the column headings that are appropriate. And then the reorder point, we didn't do one. We have no reorder point. We're not going to specify when to reorder the inventory. And then we got the inventory asset account. So the inventory asset account, we called the income, we called that the asset account instead of the inventory asset account. So it didn't pick that up. That's okay. We're just going to say this is just going to be called the asset account. If you call it inventory asset, it most likely will pick that up. And then we got the quantity as of date, and we called that the as of date. So we didn't have quantity. It didn't pick that up. That's okay. We're just going to call this the as of date. So the as of date is the one we're looking for. There's what we have. So there is the information. So now we're going to say next. So it's all looking like it lines up. We'll say next, and it'll import that information. So we've got the sell, the buy, and the track. Notice as we turn on the track, that's going to be to track the inventory. The inventory type then populates. We had an input, whether it would be inventory or non-inventory type. Now it's going to select inventory type, given the fact that if we're tracking the inventory, it must not be a service item, but an inventory item. Everything looks like it has been imported as we have imported into the Excel sheet. Note that we are entering this as of 12/31/2018. That means it's going to be as of the end of the prior year. As it is as of the end of the prior year, then it won't mess anything up in the current year. That's going to be our objective. Everything in the current year is going to be the current information. We will need a journal entry for this item. The journal entry will be related to the fact that we're going to have the purchase price of the inventory. It's going to have to record an asset because we're saying that we have this assets on the book. And we're going to see what QuickBooks does in order to input that journal entry. So the next thing we're going to do is use the import item at the bottom right. So we're going to go down to import this information. Now if we go back up to the sales tab up top, look at the sales, and we're going to go to the product and services once again. If we scroll down, then we'll see some of these inventory items. The ELP here, the Epiphone, the Epi Riviera, another Epiphone. So our inventory items looks like they have populated. If we were to add an invoice now, if we were to go to the plus item up top, select an invoice, then as we populate that invoice, we now have inventory items. So we'll go through and pick an inventory item, and then it'll have the sales of the inventory items. Now this invoice is actually a lot more, it's easy to populate, but now we'll take a look at the journal entry later on, and it's actually pretty complex because, especially once we start to add sales tax, it'll give it even more complex. The actual journal entry, the effect of it will be an increase to sales, it'll be an increase to the accounts receivable, but it'll also decrease inventory. It'll also hit cost of goods sold and record sales tax, all from this invoice. And that's all stuff that's not going on, or it is going on, without the data input person needing to be aware of it. Also, if we go to I'm going to close back out of this, and we'll say yes, and we're going to go to the reports. So if we go to the reports on the left side, and we take a look at the balance sheet, so it's probably in the favorites up top, so we'll go into the balance sheet, and we're going to take a look at what's in the balance sheet now, and we'll see that we have inventory. So we have inventory up top, and we didn't enter anything, we didn't enter any data, we just entered the inventory. Well, QuickBooks had to put it on the books. This is going to be the case with any beginning balance we put on there. It has to also do something with the other side, because there has to be two things going on in the double entry accounting system. It put the other side into equity. So now what we have is assets of $2,896 of inventory, which QuickBooks assume is in equity, but QuickBooks put it into this opening balance equity account, which is kind of a made-up type of account. It's not a real account typically. It's basically QuickBooks saying, hey, we have forced this to happen because we knew that you had inventory. That's what you told us, and we didn't know where to put the other side. We're assuming it goes into equity. This is where we put it. So that's how we'll read it. We'll have to deal with that a little bit later. Just realize that the transactions that are going in place when QuickBooks puts this into place. We'll do this with more beginning balances, and then we'll go back and we'll adjust these beginning balances at the end. For more accounting information and accounting courses, visit our website at accountinginstruction.info.